It's certainly a hot topic, whether Bitcoin could reach a multi-million-dollar valuation within the next decade. It's important to approach such predictions with a balanced perspective, considering both the potential drivers and the inherent risks and uncertainties of the cryptocurrency market. Here's a step-by-step explanation of the factors involved. 1. Current landscape and historical performance. As of today, May 19, 2025, Bitcoin is trading around $103,000, $105,000 USD. Bitcoin has shown significant price appreciation since its inception in 2009, experiencing periods of rapid growth and substantial corrections. For example, in 2013, it saw a massive surge, and in 2017, it reached nearly $20,000 for the first time. More recently, it hit an all-time high of over $109,000 in January 2025. However, Bitcoin's history is also marked by high volatility, with significant price drops following major peaks. 2. Bullish arguments for multi-million-dollar Bitcoin. Several factors are often cited to support the idea of Bitcoin reaching millions. Scarcity. Bitcoin has a hard cap of 21 million coins. As adoption increases, the limited supply could drive the price significantly higher due to basic supply and demand economics. D. Institutional adoption. Increased interest and investment from institutional investors, like companies and large funds, especially through Bitcoin ETFs, could inject substantial capital into the market, pushing prices up. Store of value narrative. Some proponents argue that Bitcoin is increasingly being seen as a digital gold, a safe haven asset that can store value over the long term, especially in times of economic uncertainty or inflation. If Bitcoin captures a significant portion of the market capitalization of gold, currently in the trillions of dollars, its price could rise dramatically. Network effects. As more people and businesses adopt Bitcoin, its utility and network value increase, potentially leading to higher demand and price. Technological advancements. Ongoing developments and upgrades to the Bitcoin network, such as the Lightning Network for faster and cheaper transactions, could enhance its usability and attractiveness. Macroeconomic factors. Economic instability, inflation, and the potential devaluation of fiat currencies could drive more investors towards alternative assets like Bitcoin. 3. Factors that could hinder such growth. Conversely, several factors could prevent Bitcoin from reaching such astronomical valuations. Regulatory scrutiny. Increased regulation or outright bans in major economies could severely impact Bitcoin's price and adoption. The regulatory landscape for cryptocurrencies is still evolving and remains a significant uncertainty. Competition. The cryptocurrency market is constantly evolving, with thousands of other digital currencies. A new cryptocurrency with superior technology or use cases could potentially challenge Bitcoin's dominance. Technological risks. Security breaches, hacks of exchanges or wallets, and potential vulnerabilities in Bitcoin's underlying technology could erode investor confidence and lead to price declines. Scalability issues. While progress is being made, Bitcoin has historically faced challenges in processing a high volume of transactions quickly and affordably. If these issues aren't fully resolved, it could hinder mainstream adoption. Market sentiment and volatility. The cryptocurrency market is known for its extreme volatility, driven by speculation and news events. Negative sentiment or unexpected market crashes could lead to significant price drops and prolonged bear markets. Environmental concerns. The energy consumption associated with Bitcoin mining has raised environmental concerns, which could lead to negative public perception and regulatory pressure. Black swan events, unforeseen global events, economic crises, or technological disruptions could have unpredictable impacts on all financial markets, including cryptocurrencies. 4. Expert opinions and predictions. Various analysts and experts have offered price predictions for Bitcoin in the coming years, with a wide range of estimates. Some, like Robert Kiyosaki, have predicted Bitcoin reaching $1 million by 2035, citing economic crashes and safe haven demand. Kathy Wood of ARK Invest has also given bullish long-term targets, with some scenarios suggesting $1 million or even higher by 2030. Other analysts, while optimistic, provide more conservative estimates in the range of $150,000 to $800,000 by 2030 or 2035. It's crucial to remember that these are just predictions and are subject to significant uncertainty. 5. Step-by-step considerations for the next 10 years. To assess whether Bitcoin could be worth millions in 10 years, by 2035, we need to monitor the following. Adoption rate. How quickly are individuals, businesses, and institutions adopting Bitcoin for transactions, investment, and as a store of value? VC. Regulatory developments. What are the key regulatory changes happening globally, and how are they impacting the accessibility and use of Bitcoin? Technological advancements. Are there significant upgrades to the Bitcoin network that improve its scalability, security, and usability? Institutional investment flows. How much capital is flowing into Bitcoin through ETFs and other institutional investment vehicles? Macroeconomic conditions. What is the global economic outlook, and how is it influencing the demand for alternative assets? Market sentiment. What is the overall investor sentiment towards Bitcoin and the cryptocurrency market? Competition. How is Bitcoin faring against other cryptocurrencies and traditional assets? Halving events. Bitcoin's supply issuance is reduced by half approximately every 4 years, a halving. The next halving is expected around 2028. These events historically have had a bullish impact on price due to reduced supply growth. Conclusion. While there are compelling arguments for significant long-term appreciation in Bitcoin's price, reaching a multi-million-dollar valuation within the next 10 years is highly speculative and depends on a confluence of very favorable factors. It would require widespread adoption, a benign regulatory environment, continued technological development, and sustained strong investor sentiment. It's essential for anyone considering investing in Bitcoin to understand the inherent risks and volatility associated with cryptocurrencies and to conduct thorough research before making any decisions. The information provided here is not financial advice. Please like, subscribe, share, and comment.